Hey guys, so we put our second week in here. Tough week to trade. A lot of the week was even harder to trade just because we had CPI on Thursday here yesterday, and the premiums were just so high because of CPI that you just really couldn't get a nice win out of anything. You had to really hold stuff and really get a big move in order to get a nice win. So the question remains, where are we at currently? Are we bullish or are we bearish? Um, let's take a look at the daily on SPY first, talk about a couple things, and then we'll just kind of see where we're at. This is probably going to be a longer video, just like my actual written TA was, just so you guys know. So we have a really nice rising wedge formed right here now. The thing about this rising wedge is if you look here, we're actually forming a really nice cup and handle. And I've been talking about this cup and handle since about right here on the 6th that we could be forming it. If we are forming a cup and handle, when we lose this support of this rising wedge, we should expect probably a retrace to about 390. And that would be where I would look for support and for a potential bounce. The other thing to think about here, and this is very important, is the daily 200 EMA right here. We yesterday came up, touched it, hard rejected, and then we had that really red opening. So that red opening of -1% almost this morning to then finish up 0.39% is pretty crazy. I mean, if you look at this pre-market, just straight dumped, and then we just straight from as soon as we opened, just pushed all the way up. I would say there's, besides maybe right here, there was not a single part of the day though that you would have just said this was a straight up bull day, that there was not going to be any retraces. It was very, very slow going. So things I'm watching here is the interaction of the daily 200 EMA. So I'm going to go back a little bit and show you what usually happens. So you see here, this is back in November. We had CPI pop this up. We touched the 200 EMA, immediately retraced. We went for another run at the 200 EMA. 2 days, closed over it, boom, immediately retrace. Now the only day here that we were able to easily close and break through the daily 200 EMA was the November 30th Jay Powell meeting. So we break through and then boom, immediately dumped the days after that. This was, in my opinion, I think that day, I don't know what happened that day, but I don't think it should have been a 3% day like that. And I think that the markets just picked up on some stuff and really ran with it. And then let's look here, December. This was CPI in December. Boom, over the 200 EMA, boom, immediately retraces, and we went for a big sell-off. Now we can go back even farther and look, same thing here. So August, this was August CPI. We gapped up after touching the 200 EMA and rejecting, gapped over the 200 EMA, and then we finally had a breakout. We put our top in, we came down, bounced, touched the 200 EMA. What did we do? Double top, boom, huge sell-off. We can go back even farther. This one in April wasn't so bad, but you can see we spent a ton of time right here at this 200 EMA just consolidating. This push in March here was probably the best, easiest push, I will say, that the bulls had through the 200 EMA. And then same thing back here. We came down here in January for our first time. We broke through it. Bounce, 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 finally break out. And this was, I believe there was a Apple's earning or something like this on this Friday that really rocketed us, if I remember correctly. Same thing, we came down, we attempted, got over it, immediately fell through. Came up, touched it, hard rejection. So basically what I'm trying to show you guys is that this 200 EMA is a major, major level. Every time we have tried to break through it, we have really hard rejected. So if you are bearish, then this is a really, really high probability of a rejection and a downside put play to 390, in my opinion, is what I'm trying to say. So the other big things to look at here from a bullish standpoint is that we broke through 390 right here. We back tested it. We held, closed over. I would like to have said it like an actual test of it, but we're very much so trading over it. This is now our 4th day in a row trading over the daily 8 EMA. We have the 20, I'll zoom in a little bit closer here. The blue line is the 20 EMA, crossed the 50 EMA, which is this orange line. The 8 EMA is now over the 100 EMA, which is perfect with our 390.1 support right here. And then tomorrow, well, Tuesday, we actually are probably, if we open and hold up green here, going to get the 20 EMA to cross back over the 100 EMA. And by end of week, early end of month, if this trend continues, we might actually get the 50 EMA to cross back over the 100 EMA. That would be pretty incredible. We have not had all of the EMAs over the 100 EMA in a very, very long time. So that is bullish in my opinion. So let's take a look at the weekly chart here. So I talk about cycles a lot, which basically is saying that if you go down, you go back up X amount to the peak, and then you have the next move down. You go up, you have your peak, and you come back down. Throughout 2022 here, this is our whole 2022 basically right here, you can see we had moves up, we would come down, have a false bottom, short peak it, and then we would put the actual bottom in. And then we would see a recovery. It would never really get back to past the previous high though, but we would have a recovery. Then we would start a leg down, have a short peak, boom, put the bottom in, and then we would recover, but it never reached the top. We would come down, have a short peak, and then we put the bottom in, and then we come back up. So now the question is, this was the last peak, true peak was in August. We are below that true peak. If this was our peak, which we would call it November, the week of November 28th, because that was the first peak in, and these are really only 50 cents within each other. If this is our peak, and this is our false bottom here, this is our short peak, because we did not break the top of it. So we are going to start, as you can see by the black arrows here, our next leg down. However, let's go back to a bull market and see what a bull market looks like. If you can see here, price goes up, comes back down, finds support, it goes back up. Comes back up, finds support, goes back up. Comes down, goes back up. Of course, the cycles are more dramatic this year because we are seeing bigger sell-offs and things like that. But what I'm saying is, if you are bullish for the markets right now, then you are going to look at this as a breakout, find support, and a bigger breakout is coming. And that would mean that we have to break this peak at 410, and we would need to see at least 420s to call it a bull trend now. However, if you are bearish, then you will believe this cycle will continue. And per my analysis of how these cycles continue and move, we should, if this is a true bear market cycle, see by middle to end of February a push as low as possibly 330s. However, I'm not personally convinced that that's going to happen. I personally think the bottom is in. I don't think that we are going to see a new low. I believe this 348.11 here will be our bottom of the bear market. One thing that I am watching, and I mentioned this last week, is these channels right here. We have this very clear consolidation channel that we have been pretty much trading in from all the way since April. I talked about how many weeks it has been in my last weekly post, but basically what I'm watching is 408.8 and 375.6 with 390.1 right here being our pivot point. So being that we broke through our pivot point and closed over it, and now we're testing our next resistance right here at 398, 399, we should expect a move up here to 408.8, which is the next resistance line. If we were to break through that, then I have what's called my extreme channel, which is the 427.7 to 363.7. These are about as extreme as I expect us to get unless something crazy happens. So unless for whatever reason we get a ton of volume back in the market, the Fed does something crazy, whatever, I don't expect us to really break these extremes. Another interesting point is right here, this 417.74 is the bear market trend line. What that means is that to be out of a bear market, you have to recover 20% from the low. So to be in a bear market, you have to drop 20% total from the all-time high. So to be out of that bear market, we have to hit 417.74. That is exactly 20% with 1 penny extra to be out of it from 348.11. So if we break through this level ever, then we are technically back in a bull market. Now, that doesn't mean we're going back to all-time highs, and I would be very surprised to see us even reach these all-time highs probably for at least another 2 or 3 years. I mostly think that this 427 to 365 will be our range for quite a long time. There is a case we could level up very slowly and probably, hold like maybe 410 to 450 for a while, or 430s to to 390s or something like that for a while. But it's not going to be a straight push right up like this. So, biggest things I want to watch next week is this weekly 8 is crossing over the 20. You can see what happened here when it did that. That actually did signal our peak. And it's actually been a pretty good signal for the last couple months now of the peaks. So if this is the peak, then we should see that downside. We did technically close over the weekly 100 EMA, the green right here. We did not quite make it to the weekly 50. We actually haven't really had very much success getting through that weekly 50. This green trend line right here for next week sits at 403.4. That is the 2022 to 2023 bear market trend line. If we were to break through that again, then I would be pretty much on the assumption that we are out of the bear cycles. You can see this was the previous trend line that we were at, which puts us next week at 399. I don't use previous trend lines. I know a lot of traders do say, oh, we broke this previous trend line. I do current trend line, so I would not call this a breakout until we were through this trend line, but it is something interesting to watch for sure. However, if we were to lose 390.1 next week, then I would actually would more consider this was our short peak, and we are going to put in some sort of new low down here. Like I said, I don't think it's going to be a new 52-week low, but we will put a low in the maybe 350s or 360s. The best bear case that is going to happen, and honestly I think this is what needs to be perfect in order to even see the next sell-off, is for earnings that are going to be the last 2 weeks of January for most of big tech need to be terrible. The banks kind of started that off today with really bad guidance. However, big tech and stuff like that needs to come out with really bad guidance and some misses. And then on February 2nd, we get FOMOC. Currently, surprisingly, there's a 36% chance that we get a 0 basis point hike. That means no basis point. That means they think Jay Powell is going to go from 50 basis point hikes to 0. The other chance is obviously a 25 basis point hike, which is 64% right now. There's no percent chance factored in for a 50 basis point hike. That could be a big wild card on the first week of February. There's very much so is a chance, with core still not really coming down significantly like CPI is, that we could get another 50 basis point hike. Jay Powell was very clear at previous meetings that he does not want to slow hikes. So if Jay Powell goes with the 50 basis point hike, and then in February, the 14th is the next CPI, if that rebounds, especially core, or even that year over year that's been coming down aggressively since July, those three things put together could be what sends us to a new 52-week low if we're going to put one in, or at least puts us back in this green 350 area, extreme channel down here. However, if one of those or none of those happen, then I am very much so even more convinced that this is our range that we are going to see until we finally break out. Taking a look at futures here, we have the same thing. Nice rising wedge right here. We actually did manage to close back-to-back days over the 200 EMA though. So that is pretty impressive considering how big of wicks these are and how much of a move up futures had to make to recover those wicks. Same thing, key support for Tuesday is going to be this 33.90. If we lose that, we break this rising wedge, and we very well could come down here and retest 39.20. So if we push up, then that's where we're going to start looking at 40.50 next. Taking a look at futures weekly. So interesting to keep noted here is 40.30 is the JPM collar. So we are getting pretty close, about $12. You know, there is a difference between SPYX and futures, so it's more like 20-something dollars, but we're getting very, very close to that JPM collar. Other thing here is, like I said, the 8's crossing the 20. We did touch the 50 on the weekly here for futures. we held very nicely that 39.20 pivot level. So that means our next plan of attack for bulls is 40.95. If they can take us through 40.95, then we very well might go see that 40.28 extreme. For the weekly bear channel on futures next week, that comes in at 41.12. Another thing to note here is we pretty much have a massive diamond pattern formed here. That means if we break out here, it could be pretty explosive. However, if we were to lose this support here, I think it's also going to be pretty explosive down. Let's take a look at Tesla now. Tesla is a highly frustrating ticker to trade. I was very bullish on Tesla yesterday. Actually, I was very bullish on Tesla on Tuesday also and Wednesday also, but we had CPI, so I didn't want to play it. We had broken through that key 123 level and we had closed over it. We were looking like we were breaking out of consolidation. We were going to have a massive move up in this area, like the 120, high 120s to 130s. However, Tesla, of course, gets a really bad news day. They come in and say, oh, well, we're cutting prices. Tesla opens negative 5%. However, impressively, it recovered all that. It almost put in a green day. It actually is extremely impressive that it almost put a green day in. So now we have our fifth close over the daily AEMA. That has only happened one other time since the September sell-off has happened. So what I'm watching is this red rising wedge right here and this 3-day resistance line right here. Key support is 118.2 and then resistance is 120.9. Whichever one of these breaks right here, I think is going to be a pretty explosive move. And if we take a look at the weekly time frame, you can see how this move is kind of basically agreed with this. We have a black and red falling wedge and then a big broader red falling wedge and then a V bottom formed here. If this is a true V bottom, we're going to get a pretty explosive move up here. And if SPY is really on a bull move now and it's going to go test bull market resistance, we very well could get a Tesla bounce finally. And I will say, looking back at this whole week of trading, pretty much since this bottom right here, has been very, very bullish. So what I'm watching is for this falling wedge, which dates back to the beginning of December, which started the aggressive sell-off, we have to open below 112.8. That's a $10 drop. Pretty unlikely, so we will break this on Tuesday. Other thing I'm watching is our resistance is 124.5 for the red falling wedge. So this is the falling wedge on the weekly now that dates all the way back to September when this sell-off started. If we break through 124.5 next week, 125 we'll call it, that is essentially signaling that the September sell-off that started is over and that Tesla is returning to a bullish movement. That would open up the upside to retest eventually 150 and maybe come up here and test this very, at the time, now big resistance at 175.9. Something else to note is that Tesla earnings is on the 23rd, so we could see a rally into earnings with high expectations. And then earnings on that Monday is either going to decide whether we're going to push really high up or we're going to start that next leg down. So we're going to be watching Tesla closely for that. Taking a look at the VIX here. The VIX actually put in its lowest low and lowest close that it has put in since January 13th, 2022, which is exactly a year ago today. Something to keep noted here is that previously, as you can see highlighted by these arrows, whenever we break into this red trend channel down here, that essentially signals a short top on the market and a bottom on the VIX. So again, if you are bearish and you believe we are in a bear cycle still, this is your opportunity. This is your perfect opportunity to open some 60 to 90 DTE puts and just let them ride. If you think we're back in a bull market or we're going to start trending more like a bull market, then we should really be looking for SPY to put in a 15 to really that same 19.6 channel. So that means the VIX is just going to kind of start normalizing down here. And if the VIX is just normalizing, not making huge massive spikes and huge moves up, that is going to push SPY up bullishly. The last piece of the puzzle, which, man, it is really just taken off here, is Bitcoin. Bitcoin is also doing a massive cup and handle here, so we could see a little retrace here. But Bitcoin it just officially hit 21.247, which that is the highest it has been since November 6th. Last time, just for reference here, November 6th, where were we at? We were all the way down here right before CPI in November. So interesting enough about Bitcoin is that I was under the same impression that the same thing was going to happen, that we were going to see a nice breakout here. However, we had the FTX news come in. This is where I was really bullish for the markets too in November with CPI, that we might actually end the bear market back then. But then obviously that didn't happen. So with Bitcoin running so aggressively, I actually trend more bullishly than I do bearish. This is the first time that the daily 200 EMA has been tested on Bitcoin since April of 2022. That's a very long time without touching your daily 200 EMA. We are going to have to see what Bitcoin does this weekend, but if Bitcoin continues to run, then I would suspect that the markets are going to continue to go up. And the reasoning for that is Bitcoin is a risky asset. That means you're not going to buy Bitcoin and you're not going to be running Bitcoin up almost, probably at this point, I'd have to go back and look at it exactly, but it's up almost 20% in like 10 days. Bitcoin isn't going to do that unless people are bullish on the markets. So this is something to watch closely. And something else I'm going to watch closely is the volume on SPY. Today, volume was actually extremely low. We only put in about 63.9 mil total, which is actually very low, 76% of the 30-day average. If we start seeing volume pour back in and we start getting some green days with volume up in like the 80s to 90s on the mill, then I actually would continue to be more bullish. We want to see some volume come back into the market and some liquidity come back into the market to really believe in that next trend up. We're not going to see an official bottom and official return to the bear market until we start trending up. Let's take a, if you look at volume here, you can see that how much volume, I'm trying to get it so you guys can see it better here, how much volume has really tapered off. So we had June, we had all this highs of volume, and you can just see volume has just slowly tapered. June and August and July was really bad, but we have not really recovered much of our volume. We would like to see a return to these high volume days. That would really signal a bottom too, but we're not just quite there yet. So hopefully soon we'll start seeing some volume, but I know this was a really long video. I just had a lot to cover. If you guys have any questions, let me know. But I hope you guys have a good weekend. We have a 3-day weekend, so enjoy the days off, and I will see you guys on Tuesday. Thank you for tuning into this video. Don't forget to subscribe and like to stay updated with my most recent videos. There is a lifetime Discord link there for you guys. If that one doesn't link, just go ahead and send me a message, and I'll get you guys a new one. Some of the benefits of the Discord is there's a live trading, live intraday commentary. I also do an updated pre-market with support and resistance levels every day. You can follow me on YouTube, Twitter, Instagram, TikTok, and Reddit.